All right, let's play detective today. We're going to investigate a single stock with some seriously confusing data. Our mission? To crack the code of its chart and figure out how analysts make sense of all the conflicting signals. Let's get into it. So, here's our central mystery. We've got this tech stock that has been bouncing all over the place. Some parts of the chart are flashing green, screaming buy, while others are flashing bright red, yelling sell. So what's the real story here? To figure it out, we're going to treat this stock's data like a case file, and we're going to look at every single piece of evidence, one by one. And so the investigation begins. The subject of our case file is a company called Brand Engagement Network, and its ticker symbol on the stock exchange is BNAI. Let's open up the file and see what we're really dealing with here. Okay, so BNAI is a marketing tech company trading on the NASDAQ. But the key piece of information for us, for our case, is that phrase right there. Price volatility. That's just a fancy way of saying this stock jumps around a lot, and that makes it the perfect and maybe the most challenging subject for our investigation. You know, in any stock investigation, the very first piece of evidence you look at, the most important one, is always the price itself. Where is it trading at this very moment, and how does that stack up against where it's been lately? This is always ground zero. Whoa, okay, right off the bat, we've got a major clue. The stock is currently sitting at $2.50. But look at the VWAP, the volume-weighted average price. It's over $6. Now think of VWAP as the real average price, because it's weighted by where the most shares actually changed hands. This huge gap tells us that a ton of recent buyers are now deep underwater on their investment, and that, my friends, is a big point of concern. So, we know the price is way below its recent average. But the real question is, which way is it headed now? To figure that out, analysts try to look past all the daily up and down noise by following something called trend lines, and they use a tool called moving averages to do it. Think of it like this. A normal price chart can look like a jagged, chaotic mess. A simple moving average basically smooths out that chaotic line. It's like putting a good suspension on a car driving down a bumpy road. It lets you feel the actual direction you're heading, whether that's over the last 5 days or 50 or even 200. It really helps you see the forest for the trees. And this is where the puzzle gets really tricky. I mean, look at this conflicting evidence. In the very recent past, we're talking the last 5 and 20 days, the price has actually managed to climb above its average. That's a bullish sign. But when you zoom out and look at the bigger picture, 30 days or more, the price is still way below the average trend. It's like the stock is winning the battle today, but it might still be losing the longer-term war. Okay, when the price and the trends are sending you such mixed signals, it's time to go deeper. We need to check the stock's vitals. Think of these next tools like a doctor breaking out a stethoscope or a blood pressure cuff. We're trying to understand the underlying health and momentum of these price moves. Our first diagnostic tool is the RSI, the Relative Strength Index. It's basically a momentum thermometer for a stock. It measures the speed and change of price moves on a simple scale from 0 to 100, and it tells us if a stock has gotten way ahead of itself, either to the upside or to the downside. And BNAI's reading? 49.59. You know, on the RSI scale, anything above 70 is considered overbought, and anything below 30 is oversold. A number like this, almost perfectly at 50, is right in the middle. It's not too hot, it's not too cold, it's a completely neutral signal. So this clue doesn't really help us solve the case. Just yet. So, since the RSI was basically a dead end, we're going to bring in another specialist, the Stochastic Oscillator. It also looks for those overbought or oversold conditions, but it does it in a slightly different way. It compares where a stock's price finished the day relative to its recent high and low price range. Aha, now we're getting somewhere. This is our first potentially bullish clue from the vitals check. Just like the RSI, this thing has a scale, and a reading below 25, like this 23.44, is usually considered oversold. What that suggests is that the recent selling pressure might finally be getting exhausted, and the stock could be getting ready for a rebound. Okay, for our next step, we're going to look right under the hood at the engine of the price move itself. We're going to check a few more vital signs that measure the raw momentum and its rate of change. Basically, we're asking, is this stock speeding up or is it slowing down? And here's where the plot thickens again. The MACD, which is a super popular indicator, is just barely positive. I mean, 0.011. That's like a tiny flickering green light. But then, look at the other two readings. The pure momentum indicator and the rate of change, or ROC, are both clearly negative. So the takeaway here is we've got one indicator hinting that things might be turning around, while two others are saying the downward force is still very much in control. So, what on earth is an analyst supposed to do with all this conflicting evidence? You've got a low price, mixed trends, and vitals that are contradicting each other. It's time. Let's put all the clues together on the evidence board and deliver the final verdict on this case file. Okay, let's just quickly review the file. The price compared to its average, that's bearish. The short-term trend, that's actually bullish. The long-term trend, bearish again. And the vital signs are just a total mess, with an oversold signal fighting against clear negative momentum. It is a classic technical tug-of-war. So what does it all add up to? When all of this conflicting, messy data is put into a blender and synthesized into a single overall technical score, this is the number you get. 5 out of 10. You know, a score of 5 is pretty much the technical equivalent of a shoulder shrug. It means the bullish evidence and the bearish evidence are in a dead heat. They are perfectly balanced and they're just canceling each other out, which leads to a completely neutral outlook. And all of that leads to the official recommendation from the analysis. Hold. It's not a buy, it's not a sell, it's just hold. The analysis basically acknowledges this messy, mixed picture, but it does note that because of those little improvements in the short-term trend and that oversold signal, there is at least the potential for a short-term recovery. So there you have it. The charts don't always scream buy or sell. Sometimes they just whisper, wait and see. And for anyone watching a stock like BNAI, the real nail-biter isn't just knowing what the data says today. It's trying to figure out which of these competing forces, the bullish ones or the bearish ones, is about to finally take control and break the tie. And that is the art behind the science of technical analysis.